Oh man, so some green in the market and some green for Bitcoin after an impressive jobs report. But is there more when you peel back the onion? And is this too little too late to save Bitcoin from a major pullback? I'm going to be sharing that, giving you the key levels in the charts that I'm seeing and I'm watching for, plus my game plan. I'm feeling a little under the weather here today, so ignore me if I'm a little bit subdued, but I'm still excited by this jobs report, which on the surface level looks quite positive, right? US economy added 187,000 jobs in July, fewer than expected, right? The expectation was 200,000 jobs, and that gives us the clue that the economy is starting to cool down. The labor market is starting to cool down. Now, why is that important? We know that's important because Jerome Powell's rate hiking cycle is his journey to get inflation down to 2%. And as long as the labor market remains healthy, as long as there's no indication that he's going to give us a hard landing, which means that unemployment, which we're going to come on to, going really high, him breaking the economy, he's going to continue to rate hike. He's going to continue to tighten, and therefore no clues around when we're going to pause or slow down. And that's what everybody's waiting for. So finally, we do start to see this cooling off, where the number of jobs added are not beating expectations like they were just months ago. But you've got to zoom in a little bit closer because this was not a fully positive jobs report. Now, before I get into some of those details, I need to show you how the market responded, because straight away here, you're seeing a red day here on the dollar index. Now, keep in mind, the dollar index has been really rampant here, right? Showing that risk is going off. This is what's caused the pain for Bitcoin. And this is something we were monitoring. We said, guys, watch out for this pattern. This showing strength, getting above its daily EMA ribbon, like you can see there, is what's causing a lot of the pain for risk on assets, which of course includes the NASDAQ, but more importantly for our purposes, Bitcoin and therefore all coins as well. But we've had a doji candle here yesterday, followed by a big red candle going into the dollar index's EMA ribbon. So the question we need to analyze is this report and what we're seeing here enough to send the dollar index back below its EMA ribbon, which then from a weekly perspective means we can reject it? Because what the dollar index is going to do is going to want to follow the yellow arrow I've got drawn here. It wants to go on that route there. But what we want to see it do is the opposite. We want to see this get rejected, go into the EMA ribbon and get rejected. And so far with this big wick you're seeing here, it is getting rejected. Now, if you want to learn TA, if you want to understand how to use EMA ribbons and spot all these patterns like we do, ijaz.uk/TA. Reach out to me in Telegram, ijaz.uk/TG, if you have any questions or if you're concerned if you're a good fit for this TA course, and I'll get those questions addressed for you. But that's what we're watching right now. So now we need to understand, okay, with that backdrop, how are we looking here on Bitcoin? Well, Bitcoin's in our clear pullback, right? Remember, we've been monitoring this channel. I drew that red rectangle to say I'm waiting for us to get closer to our weekly EMA ribbon. And we're getting close. But the question is, are we going to get that full touch into the EMA ribbon? And are we going to lose our EMA ribbon? I continue to hold out for 27.7. Nothing here on this jobs report has changed my mind. I'm going to show you exactly why. Now, on the headline, you can see why people are getting a little bit bullish. But I want you to focus on this. The unemployment rate was at 3.5% against a consensus estimate of 3.6. Unemployment's not increasing, guys. Yes, the non-farm payrolls expanded fewer than expected. Not crazy, 187 versus 200K. But the unemployment rate's not increasing. If anything, it went down, right? There was less unemployment. Also, the other important thing is to look at the average hourly earnings. Average hourly earnings rose 0.4% for the month and 4.4% annual pace, both above expectations. And this is what causes inflation in the economy. Remember in previous videos, if you guys have been watching me for a while here throughout this tightening monetary policy cycle, we've spoken about the concept of a wage price spiral. And a wage price spiral is if wages continue to go up, if average hourly earnings and year-over-year annual earnings go up, it's going to create more sticky inflation. And this is the problem that Jerome Powell has not managed to break the back of just yet. This labor market, particularly with the unemployment rate and the average hourly earnings, has been particularly stubborn. And I don't think Jerome Powell is going to take much positives from this. If anything, I think he may set him up for another 25 base points. I'm calling this early, but again, we'll have to see what data we get between now and the next FOMC meeting, which, by the way, is all the way on September the 20th. So there's a big gap between now and then and a lot more data to come out, okay? So we've got to take all the data holistically before we make our decisions for that next meeting. Incidentally, markets currently are pricing in, we are getting a pause, right? 85% of the market, even after this jobs report, are still pricing in that we're going to get a pause. They're pretty set on that. And they expect that by November time, we'll still be sitting at this rate, right? 73% of the market still thinks we'll be sat at 5.25 to 5.5 on the Fed funds rate. So they think we're pretty much done in our hiking cycle. We're just going to stay here for longer. But with these kinds of figures showing that unemployment's still not as high as expected, we're not seeing the average hourly earnings come down. maybe Jerome Powell's got permission to do another 25 basis points. Because remember, a lot of people are still calling for at least 2 more hikes before the previous one we've just had. So all of this to say that I still think we're going to get this pullback. I can't see how we're going to bounce from here. Yes, we've got a nice doji candle here on this weekly candle, but does that really mean we're going to start bouncing up and suddenly get momentum to break through 32? I can't see it. Now, of course, you've always got to marry up technicals with fundamentals, with macroeconomics, but right now the technicals are telling me there's a pullback at 27.7. The fundamentals, which we just went through in terms of the labour figures, are showing me, look, it's not massive news to write home about and suddenly be risk on. I think the market's just trying to take some positives from it, which is why we're seeing the dollar index cool off here slightly intra-week. But it's still a positive week for the dollar index. It's just given up some of the gains it had earlier in this week. So the question is going to be, how do markets take this going into next week? Will the dollar index try to regain its EMA ribbon? This is going to be the key battle. If dollar index regains its weekly EMA ribbon, which you're looking at right here, the chances increase then of Bitcoin losing its weekly EMA ribbon. If Bitcoin loses its weekly EMA ribbon, then things get scary. Remember, I don't want to talk about it too prematurely, but we have a big double M pattern looming here, which if we do visit those 25.8k levels, which is the wick of this candle here where we rotated last time, we could be forming a big bearish pattern to the downside. For now, let's focus on the positives, right? We've got a good figure coming in on the labor figures in terms of the headline figure. That's good. Unemployment, not so good. Average hourly earnings, not so good. In terms of the technicals, fine. If we want to come down into this red rectangle, nice dip buy for me, but then I need to see a response from the CMA ribbon. I need to see a bounce, I need to see good volume, and we need to move to the upside. That's what I'm seeing here in this market. Hopefully, if you appreciate this type of up-to-date content, as and when the news is coming out, right? How many channels are actually covering this stuff off in depth? They're just saying, oh, take a long position, take 100x leverage position. You guys know that's not the purpose of this channel. This is for serious people. I don't need millions of people watching these videos. I just want you guys who are serious to learn the macroeconomics, to learn the fundamentals, to learn the technicals. And if that's you, make sure you reach out to me in the Discord, in the Telegram. Make sure you jump into our TA course, because this is a sustainable and pragmatic way of building wealth. Don't listen to what everybody else is saying. All those moon boys out there, those 15-year-olds who are making millions in crypto, forget all those guys. They're just completely capping and selling a lifestyle which isn't true. You've got to put in the work. You've got to understand all these different macro elements, fundamental elements, and ultimately you've got to do the research, all right? So make sure you check out my course at jarls.uk/TA. Support the channel by trading with Bybit, jarls.uk/Bybit, and I'll see you in the next one.